Wow. That's all we can say is wow. We hope you feel the same way, those of you that have been following these updates for the past several weeks, a few months now. Did you do your homework last night? You know, for those of you that are really interested in technical analysis, yes, you should have done the things we pointed out to you in terms of going back and looking at them. The homework that we gave you, at least in theory, was to go to our website, stockmarketcycles.com, no charge, go to the bottom of the screen and look for the link that says Charles Dow Award. In that Charles Dow Award, we talk about the sign of the bear. This could be premature. We're a little more than halfway through a setup, a potential setup for the sign of the bear. But there are so many other things going on here that hopefully, if you've been watching over the past several months, especially the past 2 or 3 weeks, we want you to pay attention to the cycle projections and the technical aspects of the market. So we have some new homework for you. What we'd like you to do is go to youtube.com/C as in chapter /stock market cycles. If you go there, you'll see all the videos that we have done over the past few months. The one we want you to look at is dated October 25th. It's a Friday, the week ending October 25th, exactly 3 weeks ago. And if you go there, you will see a couple of charts. One of them will be this one. Actually, this is not the chart that we want to start out with. We want to start out with this one. Take a look at this chart. You'll see this chart. By the way, on that update of October 25th, if you want to maximize your time and don't want to go through the whole date, I've got time here for you. You start at 4:03, 4 minutes and 3 seconds, and you can end at 11:55, 11 minutes and 55 seconds. If you do that, you'll see us discussing the two charts I'm going to show you now. This is the first one. This is the daily closing price chart of the S&P cash. And when we did that YouTube update 3 weeks ago, on October 25th, we were down in this area somewhere, just under 3,000. And we said, I'll quote what we said because I wrote it down, by the middle of November, you could reach up to this higher trend line tops line and reach into the projection area for the S&P cash. That's an exact quote from that October 25th update. This is where we are today, folks, okay? We are inches away from this projection level, which calls for closing prices of at least 31.3504. Well, guess where we closed today? We closed today at 31.2046, a mere 15 points away, less than 15 points away from that minimum upside projection. At the same time we were doing that, we were approaching this tops line on the S&P. And I'll give you the anchor points for the tops line. It begins, this is closing price now, not intraday. The tops line begins on April 30th of 2019, on that close, and it goes through July 12th of 2019. That's this bold green line, the dark green line you're looking at now. We projected that forward. We said it met the projection area in the middle of November. Here's where we look. We clicked this and it said November 15th. See that at the top of the window? So we said there's a good chance that the S&P will attempt to reach that projection window at the same time as it's getting up to that trend line. That's exactly what happened. So far, so good. What does this mean? Well, before we start talking about what it may mean, let's take a look at the next chart we showed you on that same October 25th update. That looks like this. This is a fabulous trend line. I know I use the word magical, and I hate to say that about anything involved with a market, technical or not, but it's almost a magical trend line. And this is the other one we pointed out. Now, these lines don't meet. This top line, the red line, is the prior all-time high on the New York Composite Index, registered on January 26th of 2018. We've never surpassed that high, by the way. So that line coming across horizontally, and this line, which is the trend line, they don't meet until first couple of days of January. So there's still a chance that something like this is going to work out. We could see the S&P meet its projection, meet its trend line, and then start to see some kind of pullback. We're only 6 weeks away from the end of the year, folks. That's right here. This is the end of the year. So will we see something like this, a pullback, and then a final move up, and at this point begin to see great divergences between the market indexes and the advanced decline line of the New York Stock Exchange, which, by the way, we have divergences already. I mean, we've satisfied the minimal requirement for divergences with a new all-time high, not confirmed by the daily advanced decline line of the New York Stock Exchange. So these are the possibilities, but I want you to see what is happening with this trend line on the New York Stock Exchange Index in relation to its all-time high. We came very close to it today. I don't think it's going to zoom right through and break above. Could do that. Anything can happen in the market. But this has presented incredible support and resistance. When you break below it, it presents incredible resistance right here, right here, right here, right here, and we'll see what happens in the next day or two, the next week or two. Okay, so that's the background in terms of what's happening with the numbers and the projections. Very close to meeting. Now, let's go back again to look at this projection in the S&P. This, my friends, is the highest outstanding projection in the S&P. Now, granted, it's a large rectangle. It goes all the way up to 3352, which is 200 points higher than here, which is another 6 or 7%. I don't think it's going to get up there, but we cannot rule that out because we have a projection that calls for the possibility of going up that high. I believe this trend line for now, at least over the short term, will rule. So what else do we have to look at? I'm a little reluctant to talk about the sign of the bear, but that, I think, when I go to my grave, if there's going to be anything left in terms of my market analysis, I believe it will relate very closely to the research I have done on what I call the sign of the bear. It's one of the things that I have asked you to look at on the website, and I'm also going to tell you now that accompanying this video today, just below the video, I'm going to put on 2 links that I did, a special report on the sign of the bear that I did back at the, I was going to say the end, but it was around October of 2017 and December of 2017. There's a part 1 and a part 2. I want you to know, if you're interested, what the parameters are to get a sign of the bear. I'll tell you in a capsulated form what we're looking for. We're looking for a churning pattern, and in my sign of the bear research, I define that churning pattern by a day where the advanced decline ratio, that's simply the number of advances on the New York Stock Exchange divided by the number of declines, where that advanced decline ratio is both below 1.95 and above 0.65. So in other words, it's not a big up day, and it's not a big down day. It's kind of a churning day. Advances and declines remain relatively close to each other. We need to see 18 consecutive days of that to get the setup for a sign of the bear. Okay? So the setup for the sign of the bear is just the beginning. There are 3 requirements for the signal. I'm going to show you, there's no charge for this material. I'm going to show you at the bottom of today's video. I'm going to put a couple of links in on YouTube to show you online the 2 special reports that I did towards the end of 2017 that give you a description of the sign of the bear and all the requirements for the sign of the bear. Now, we need 18 consecutive days of those churning-like days. So far, we've had 10 of them. There's still a long way to go. In fact, the 18th day would be the day before Thanksgiving. So it's going to be very interesting to watch the market here. We're very excited about this. Mind you, that streak could end at just one day below 0.65 or one day above 1.95 ratio. That's it. You've got to start the count from the beginning. You've got to start all over again. And if we do get the 18 consecutive days, which is what we're watching for, that would be the setup. As far as the other parameters that are required, again, I'm going to show you at the bottom of the video. I'm going to show you a link to the 2 special updates I did at the end of 2017 that talk about this in depth. So, relatively long update today. It's the end of the week. This is really exciting. Wow. I mean, look at this. This was 3 weeks ago. We said, watch for something like this to happen. And here we are, inches away from the trend line, inches away from the lowest projection zone. That's going to be it for now. I'm excited about the next week and a half in the market. Let's see what happens. Go to the bottom right of your screen. If you have not subscribed, subscribe. And once you subscribe, click on the bell. You'll be notified of all the updates that we do, whether they be special updates or not. Go to the bottom of the screen and make some remarks, make some comments. Tell us if you're enjoying these or not, if you're getting anything out of them. If you are, give us a thumbs up. If you want to give a thumbs down, that's fine. Please explain why you're doing it. So that's going to be it. Have yourselves a great weekend. We'll talk to you next week. Thank you for watching.